Sean Haney here with RealAgriculture.com and Real Ag Radio, Rural Radio 147, Sirius XM. Let's talk some markets. I'm joined right now by Scott Chilladay, better known as the CowGuy from RFD TV. Scott, great to chat with you.
Good morning. Yeah, good to be here.
Okay, I guess right now, how would you describe this market? It just feels like there's this abundance of caution and we're just continue to kind of shuffle our way to the downside. It just feels like there's a lot of risk working against us. How would you describe what we are watching right now?
Yeah, well, I mean, you got to have to look at it like in probably a 4-year view, because I think the high prices of the last few years have polluted is probably the strongest word, but I mean, it's really affected the way folks have kind of handled themselves, especially in the commodities area. Now, I have to look at fixed income and equities to get a better picture of commodities, because they all kind of three work hand in hand. You can't talk about commodities without talking about inflation and interest rates, and those two things obviously have a lot to do with what equities and interest rates are doing. So I would say this, as far as commodities go, I feel bad for the producer. We have a family farm. I get out of bed on the side of the producer every morning. I have to pre-apologize for that. I know on RFD TV, there are consumers, General Mills, Pillsbury, and the likes, that do want lower prices and genuinely want that, but I can't help it. I want the farmers to see higher prices, and we had them in January this year, but the expectations were pretty high that it was going to be another year like we've had the last 2 or 3, and obviously you can tell by my tone of voice it hasn't worked out. Especially April was pretty brutal, and the first few weeks of May have not been kind either. Combined with the fact that we have been, combating inflation. Inflation, I don't want to say it's coming down. It's just going up at a slower pace. That's been something that's worked against us. Higher interest rates worked against us. Where I think, the first thing that really, I wrote about it in probably February, but when I felt as though we were going to have an El Nino year, we have a fairly high likelihood of hitting our projected yields, our trend line yields, when we have El Nino years. And we started to get some rain and some pretty dry areas in America, and I thought in the U.S. here, and I thought, and then I think the funds jumped in on that, and I think that they're fat and happy, and it's going to take a little bit more than just maybe a dry 10 days in the Midwest to kind of scare them out of their shorts. And so I think it's going to be a tough road to hoe. I mean, we could get a genuine weather rally, I suppose. But Sean, I just think it's way too early to be pinning my hopes on that, because I can't pin my hopes on demand right now, because arguably we're overpriced.
Yeah, and if you mentioned the broader market, you look at crude oil, it's had its own issues as well. Like that's kind of an indication as far as how the economy is going as well. We're kind of, I guess, kind of stalled out here right now. It sort of feels like. Yeah,
we can't. I mean, my view on crude oil, and this is something I've said, that finally they're getting off their keisters and doing something about it. But I had not really heard from the ethanol industry about all this push to EVs. I mean, I'm like, where have you guys been? While we're working on trying to get something together with jet fuel. Okay, yeah, let me know how that goes for you. I mean, there has been that's been something else I think that's been weighing heavily on the grain markets, because 1/3 of our balance sheet in corn goes to ethanol.
Yeah. And
these guys have been sitting around watching the administration, or at least California's administration, push everybody towards electric tractors and the likes by 2035. Even the federal government's put some things in place for that as well on that time frame, or sooner, by the way. You've got Jennifer Granholm talking about making our military all electric by 2030, which is absolutely impossible, but still they talk about it. And I just can't believe that something that's 1/3 of our corn balance sheet, they haven't really. I don't know. I would have thought the ethanol lobby would be going to renewable fuels, would be going crazy. I know that they have woken up to it a little bit, but I just can't believe I haven't heard a lot more from them. And now we're starting to see some pushback even in the last week. So that's been good. But that's also been weighing. There hasn't been any good bullish story to run a buyer in to try to take these markets higher. And if it's not going to be demand, because we are arguably overpriced to some things, it's got to be weather. But weather it's just too early for me. And if we do get it, Sean, I mean, I think that there's going to be a lot of selling from folks that missed it on the way down. So it's not going to be that automatic snapback. And if we do, it's only going to be there for a couple of days. You better have your orders in and resting. And I don't want to be too doom and gloomish. I'm just trying to be, as a matter of fact. And if I could get, I did a radio show this morning here, and I said, the D's $5 calls to expire, on the D's contract in corn. 580 calls. Sorry. We're trading about 520, 518 in D's corn right now. He says, they're worth 17, 18 cents. Would you be a buyer? I said, no, I'd be a seller. And he says, why? I said, because I want that to be a problem for me if I've got corn. If I can get them done for 20 cents, that puts me around $6. Come make those short calls a problem for me. Make those margin calls a problem for me, because that would be a great problem to have.
Yeah.
And so
kind of like tempting the market, like washing your vehicle.
Right. And if it doesn't work out, you brought your break-even price down to 560, right? Because you sold them for 20. I mean, that's where I'm at with this, because I feel like the market's going to be heavy on the way up, because I do feel as though, I don't know. I mean, when we were farming on an everyday basis, I would have said by this time of year, we would have been 30% covered, maybe a little bit more. I don't know. I mean, and now are you going to be rolling out the boat and trying to cover yourself at 520 in D's corn? I don't think so.
Well, and I keep on coming back to the fact that in the past couple of years, you were so rewarded for putting in the bin and just holding. Like, that's where the rewards were. And there was so much regret about, sold too early, right? Because the market was just on a rocket ship on the way up. It's like a SpaceX shuttle. And we're not in that environment now. We have to continue to remind ourselves 2 years ago or last year is not this year. And so the strategy needs to shift.
Yeah, we call it short-termism. Whatever happened yesterday is probably going to happen again today, and that's not right. And you can lose a lot of money that way. And so we were, at the beginning of this year, we were hanging around, $6 in corn. You could have sold all you wanted for about 2 or 3 months. But because cash in the front month was trading at $7, everybody thought that's what was going to happen. And, when you have a disparity like that, when one is too low and one is too high, everybody automatically assumes the low one is going to trade up to the high one. But sometimes the high one can trade down to the low one, and you're left, holding the bag. But you combine that with the fact that we've got an economy that's slowing down. You combine that with the fact that we've seen a historic rise in interest rates in the last 12, 13 months. They've gone up from 0 to 5.25% or 5%. Again, give me a reason to run out and buy this with both hands. That's why I think that the funds are comfortably short. I mean, it sounds like a Pink Floyd song, but they are. And there's nothing out there we've had some things that you would have thought would have scared the market, even in, say, wheat, and it was good for a 20 or 30 cent one-day rally, and then it erodes away.
Well, I think it's what some producers are looking at is like you look at some of the yield predictions on the wheat tour, and not good, actually terrible in some areas. But we need adversity to the corn crop, not to the wheat crop, in order to draw the broader market higher. Would you agree with that?
Yeah, yes, I would. I do. But here, I also take issue. Look, when I started at RFD TV, I told the owner, Patrick, I said, I don't want to, I was in the markets for 36 years. I don't want to teach farmers how to farm. They should know that by now. What I want to do is teach you what to do with the money you make from farming. Okay. That's what I want to do. So I'm not going to, because, we had a family farm, but my father and I both traded in the pits in Chicago. And so when guys would come around the tavern where we had our farm and try to talk to you like they're going to teach you how to farm, but they were from Chicago, we're like, forget it. You're talking to the wrong people here, right?
Yeah.
And so I think that there needs to be some education done with the general producer public, because I'm a little angry because a lot of guys want to come on my show for like CowGuy Close or even on Market Day Report.
Yeah.
And they send me a ton of research. And Sean, they want me to read it because they want me to call them up and have them on. Well, that's fine. I get that. That's how the world works. But to a research paper, all, January, February, March, April, all caught. They were talking $8, $9 corn, $16, $17, $18 beans, because they're trying to sell their research to farmers, right? And they want to talk to their, they want to talk the talk and get people to subscribe to their newsletters.
Yep.
And I just kept looking at this going, you better be right, because you're setting up these people for some big time pain. And so, of course, they set people up for big time pain. You can tell where I'm going with this. And then on top of that, I got really angry at that wheat tour, because what is that data worth? I mean, what are you trying to do to get farmers to hold on to what they got more and have it go down more? I mean, you need to say, here is what we see in a very stressed area of the states. But I want you to take consideration where the dollar's trading, what interest rates are doing, what larger crops in other countries are doing, because you need to know that. Because just taking the data from the wheat tour, I would say it's worth zero. because it only hurt guys.
Mm.
They held on to bad positions because of so what is that data worth if it's not going to be? I mean, you can't just take that data in a silo. You need to have everything else on the table, and it needs to be one of 10 things, not the thing. And every day they kept on coming out with world-ending stories, 1950s stories about how bad things are, and wheat was, every day was down another dime.
Yeah, going in the opposite direction. Yeah, and
so what is that data worth to me? Zero. I'm a trader at heart, right? Give me some data that says it's going down another dime, even though you're telling me we've got the worst crop since the 1950s. That's what I want to know.
Yeah. You brought up interest rates. What do you think the Fed does next? Do you think they continue to rise, or is this pause real?
Well, Jay Powell poured cold water over my initial reaction, which was I thought they were going to raise rates again one more time, another quarter. The market expectation got up to about a 35% expectation. I haven't checked today, but the last 2 days, for the next meeting, there's a 25% chance they raise rates again. We're at 4.9% CPI. That's what we call our inflation rate. We want to get down to a 2% level. 4.9% is still way too high. And you say, well, Shelley, it was 9.1. But here's what you have to take consideration. I traded interest rates in London for a long time. 4.9% is prices are 4.9% higher than they were this time last year. That's what that represents. Mm-hmm. Well, this time last year, prices were 8.3% higher than they were in 2021. So that's a 4.9% increase on top of an 8.3% increase.
Yeah.
So inflation is not coming down. It's just going up slower. And I think the Fed realizes that, and that's why they want to stay vigilant. Yes, when you look at the headline number and all the news outlets, they say inflation's coming down. No, it's not coming down. It's just going up slower. But when it was 9.1% and now it's 4.9, people think, okay, we're getting there. But still, even if they get to their 2% mandate, that means prices are still going up 2% a year. It's not coming down. You need to see a negative CPI number for prices to be coming down. So I think they're worried about losing face. They've already lost face, if you ask me, and this is what they're good at. They probably pause. But what they're going to do is run the risk of the Saudi oil minister that he came out yesterday talking about speculation, and you better be careful being short oil because they might want to do another production cut, and that could send oil back up to the mid 80s. And if you see oil go up, now commodities aren't that big of a part of the CPI, but energy is. And if you see energy pop up like that, another 10, 15%, that's going to bring CPI back up above 5, maybe make another, and then you've paused. And then all of a sudden there's a big, huge kerfuffle. So they probably should raise it one more time, but they probably won't because they're the Fed.
Scott, I love chatting with you because you like your life has been as a trader, right? And so you think about it from a trader's perspective, and you right away, when you have inventory, you're immediately biased on what direction you want the market to go. When you're a trader, when you're trading both sides of the equation, you're just looking for movement.
Yes.
And right now it just feels like there's some chum in the water for people that want to be on the short side.
You're exactly right. And that's why I say with these funds, don't be mad at them. Don't be mad at speculators. I mean, they serve a purpose too, right? Speculators, when they see that there's too much being made of something, they sell it, they go short, the price goes down, which makes it profitable for other people to move into the market and start, making it again. And they correct markets. These funds can, and so they've stepped in and they thought what I thought. El Nino, we're getting some rains and some stuff that doesn't normally get. Look at all that rain we got in California this year so far, right?
Yeah.
I mean, come scare me out of my short position, right? And all we've done, and because we're overpriced compared to the rest of the world, who's had some big bumper crops in wheat, we've frozen all the producers. They're not selling. They're not buying anymore, but the market's just come off and it's been historic. I mean, I don't know what day it was. Some day this week, Chicago wheat was off 49%, over the last 12 months. I mean, that's huge. I mean, and so that's why I get angry. I'm like, okay, thanks for your wheat tour, but that's like, that actually hurt me, if I'm a producer, because that's not going to get them to sell. If anything, it gets them to buy more. And I think that you need to take everything into consideration. And once you finally do, then you understand why the funds have sold this thing.
Yeah, great points. Hey, Scott, thanks so much for joining us. I really do appreciate it. Keep up the great work at RFD TV and the CowGuy close. Really appreciate it.
All right, brother. All right, Sean. Thanks.